I guess can you all hear me? And can you all see the video also? Audio, video in the screen. All three okay? Yes? Yes. Good. Fine. So we'll start the discussion. So it's gonna be unit number 15, finance management. Yeah, it's a bit of a difficult chapter, a lengthy chapter as well. But if you have done accounting, I hope in accounting you have studied ratios chapter. So if you have done that chapter, maybe it would be a bit easy. I'm not saying the complete chapter would be easy. Maybe a partial of that would be easy because financial ratios every year they ask it as a part one question or in part two like a calculation. Okay, so fine. So if you take finance management, we'll just rush through the outlook. Okay, so if you take financial management, which is your unit number 15, FM. So there are many subtopics based on the teacher's guide. So I'll write the subtopics based on your teacher's guide. The first subtopic you have is financial management. Okay, the role of financial managers. That's the first one. Okay, then second subtopic you have is the financial requirements. Why you need money. Okay. And third, you have the ratios, but there is no proper order here. You can see. And fourth, you have yeah, investment opportunities. Okay. The fifth one, you have financial market parties. Who are the parties involved in financial market? Then financial market performance. Okay, then seventh, you have Columbus Stock Exchange. This is a crucial part. Then eighth, you have securities. What are the securities that is traded in the financial market? Okay, then ninth, you have the functions of CSC. And finally, as the 10th one, you have the performance of the stock market. So I know this topic is very complicated. If you study these, if you go in these three subtopics, these 10 subtopics, it's very complicated. So we'll make it more easy. So in our theory, we studied as only three subtopics. Okay, the three subtopics are, one is the financial sources. Financial sources includes all the finance management definition, functions, finance managers, investments, okay, financing decisions, all those stuff. Then secondly, financial market. In financial market, we'll be talking about the stock market, okay, the capital market, money market, all the market related stuffs. And finally, the last subtopic, so is financial ratios. So if you categorize the topic chapter into these three subtopics, it would be more easy for you. Okay. And if you see the weightage, if you have done the past paper, you could have seen part one. Obviously, there is a 3-mark question. There are three questions, either three MCQs or two MCQs and one in fill in the blanks. Plus, there are some additional questions all in part one, but in average, it's 3 marks. And if you see the part two, in part two, it's around 4 marks. So altogether, like around this 7 to 9 marks, they test this chapter. And in part two, they tested question number 6, Roman number 4 to 5, or question number 7, Roman number 1 to 3. So this is the area that is this chapter a lot. Okay. And if you just skim through, you could have come across topics like frequently tested topics. Okay. We say FAQ. Okay, frequently asked topics. One is they're asking about ratios a lot. Okay, then about break-even points. Then the sources of finance, internal source, external source. Okay, then working capital. These are some topics which has been tested frequently in all the past papers. Okay, so just a small outlook of this chapter. Is that clear? Is this no maker? You can't skip this unit dear. If you skip this unit, okay, if you don't study, if you target not to do finance management means the cost will be okay. So you can see the picture which the coordinator shared in the group finance management part one. Obviously, that is 3-mark question. Some years it has gone even for 6 to 7 marks. So if you didn't study finance management part one, okay, almost 6 to 7 is gone. Okay, altogether in your final paper, almost out of 100, 10 marks gone. That means you can target only 90 marks and work ahead. So finance management, kavadavat skip karanne pa. That's what I said. You can't skip any chapters because definitely it will be tested in part one. Okay. So guys, is that clear? A small outlook of this chapter. Yes, good. Fine. Uh, then that's what it is. You can't. If you delete means, I said that 10 marks you had to risk yourself. Okay, then you had to work hard and study for 75 marks for an A means you have only 15 marks to lose. So it's very risky. Harry, we'll start the discussion. Wait a minute. I'll take the past paper question numbers. Question number 28. Yeah, Fatima. Definitely two questions they test. In addition, sometimes it can go for three and four also. But obviously, 2 marks are get a test. Okay. So question number 28. Which party is not directly involved in the activities of the Colombo Stock Exchange? So in the share market, which party is not involved? So in share market, the parties involved, we can give a small acronym for that. We can say CBSL 5. So almost there are 8 parties involved. Okay. C stands for CDS, Central Depository System. B stands for brokering institutions. Okay. The other stands for Securities and Exchange Commission. L stands for listed companies. Okay. Then F stands for Finance Ministry. They also participate. They just monitor how the function works. Then I stands for investors. T stands for trust banks. Okay. Then E stands for exchange company. So these are the 8 parties who are involved in a Colombo stock market. Okay. So here the answer would be then listed companies hari, brokering hari, securities correct, trust bank second one. Registrar of companies, they are not involved in the Colombo Stock Exchange. Okay. Then question 29. When debt capital is less than the total of ordered share capital and reserves. Can I say me one word for this capital? The capital which includes the shares as well as reserves. What do you say for that capital? What do you say for that capital? Very good. Okay. For this capital, we say equity capital කියලා. For this capital, what do we say? Equity capital. So in this case, in question number 29, okay. So if you compare your debt and if you compare your equity, they are saying that your equity capital is higher than the debt capital. So, for debt and equity, to show the relationship, we use a word called gearing. Gearing shows you how much of external debt capital you have. If your debt capital is very high, we say high geared. If your debt capital is low, means low geared. Debt capital means like bank loan, debentures and all. So what do you say for this situation? Here the debt capital is low compared to equity. So is it high geared or low geared? Yeah, okay. For this we can say it's a low geared company. It's a low geared company because they have only less debt capital. So answer number three. Answer number three. Okay. Then, question 30. A method of direct. Direct means no one is involved in between you. The company gets the money directly from the source. No one is in between. Okay. And internal means you get money within the business. So what would be the answer? Share issue, because this is an elimination. You read each and every option and find the correct one. Share issue, yes, direct, but it's external. Bank loan, it's indirect. You need someone and it's external also. Debenture is direct, but it is external once again. Leasing is also external, so it's retained profits. So the company profits is within the business and direct can directly use without using any intermediaries. Answer number 4 there. Okay. Alright. Then fill in the blanks. There is no question. So guys, is that clear? Part 1, 2016 part 1 paper clear? Clear, ne? Okay, fine. Now we'll move to part 2 then. Part 2 question 6 ke 4 and 5. Okay, we'll see 4 and 5. State the two main objectives of finance management. Okay, quickly type and send me. Okay, so state Nisa, you know you to explain in depth. Only 2 you have to write, but if you know more than 2, you can write it, no issues. Can you say me what's the main objective of finance management? There are many objectives, but say me what's the main object? What's the main objective? Not profit maximization, wrong. Yeah, owners wealth maximization. So this is the main objective of the what finance management. Okay, then you can write other objectives like profit maximizing, maximizing the earnings per share, minimizing misuse of fund, maximizing the sales. Okay, proper optimum cash flows. Okay, so you can write other objectives, but the main objectives must be there. Okay, if the first one is not there, sometimes they won't give you marks. Okay, and the second question, what's the second question? So first question easy. Second question, they are saying, briefly describe, briefly describe means write a small sentence. Four factors that should be institution to obtain a loan. Okay, so they're asking you what are the factors you have to consider when you obtain money. Okay, when you obtain money or when you obtain a loan from a financial company, maybe it can be a bank or it can be a finance company. From them, when you're getting money, what are the factors you have to consider? You have to give a small explanation. They're asking you, expect you to write four. Huh? So we'll see what are the factors you would consider. Yes. Okay, you have to consider the cost. So I'm getting money. How much of money I had to repay? Cost means the interest here. What type of institution is that? Time taken, how much time I can take to prepay the loan. Okay, and also relationship with institute, the amount, security, how much of collateral I had to keep, the conditions and all those stuff. Okay, so make a vitra clear never. Maybe you can write a small sentence. Okay, if I wanna take and write one small sentence, I can take, will take loan amount. Okay, we can write amount of fund required, amount of fund required. Since it is briefly described, so it's better if you can write a small sentence. Amount of fund required. That's it. Okay. Fine. Fifth question. Give your views comparing the expected. So always underline the key terms up and the actual status of financial ratios given below. And suggest an action to be taken to reach the expected status. Write only the ideas and actions taken to be in your answer, taken in your answer script. So they are given you inventory turnover. Inventory turnover means how many times you are selling your stocks. So you wanted to sell your stocks of 4 times, but unfortunately you were able to sell only 1 time. So idea means what would be the reasons why they couldn't sell their stocks. They wanted to sell 4 times, but they sold only 1 time. What would be the reason for low inventory turnover? Yeah, maybe we can take why they couldn't sell the stocks is because they didn't do enough promotion is low. Maybe there are high competition for them. Okay, so those are the reasons why they were unable to sell the stocks. So what's the action they can take? Simply they can do more promotions. When they do more and more promotions, is the customers keep on buying your stocks, right? Fine. Then debtors turnover. Debtors turnover means how many times your debtor is paying you the money. So you wanted him to pay the money 4 times, but he paid only 2 times. Is it good or bad? What do you all say? You expected him to pay the money 4 times, but he paid only 2 times. Good or bad? Yes, obviously it's bad. Ne? So, what would be the reason why he couldn't pay the money? Maybe our debt collecting policy was ineffective. Is lazy, okay? Ineffective. That means the way we had to keep on asking the money. Ne? If we don't ask, they won't pay. So maybe we didn't give a proper collecting policy. So because of that reason, we couldn't get the money. So what's the action we can take? Maybe you can give him some discounts. If you give him some discounts, maybe he'll be encouraged to pay the money very quickly. So those are the ideas and the actions to be taken. Yeah, factoring also can take good. Factoring also can be taken. So is that clear there? Clear? 2016 paper? Yes. Had it. Next, 2017. 2017, question number 19. Question number 19, where some of the financial decisions are given below. Out of the above, which group contains only the capital structure decisions? What do you say? Capital structure decisions kya ne? Is it an investment decision or financing decision? So capital structure, guys, usually falls under financing decisions. Okay, financing kya the way you get money. So capital financing, there are two categories. We say short term and long term. So capital structure decisions, if you take, it is financing, yes. Under financing, it falls under long term financing. Okay, so the way you get money for a long time. So usually long-term financing, okay, you have the two capitals, which you have the equity capital and the debt capital mostly. Okay, so we'll find the answers. Investments, wrong. Accrued expenses, that is a way to get money, but accrued inside is short term. Appropriation of dividend seems correct, but the thing is, dividend is financing. Okay, financing, yes, it is long term, but long term financing decisions can be divided into two further. We can also say, okay, capital structure decision, and we can also say, very good, I mean, the dividend structure decision scale. So appropriation of dividend comes under dividend structure, not capital, wrong. Then debt capital, correct. Capital reserves, correct, because that is a part of equity. Yes, equity capital, correct. So it should be D, E, F, answer number 5. Answer number 5. Okay, then question 34. So there was only one MCQ from this year. We'll go for question 34. Okay. Stocks of any stocks, shares of any listed companies on the Colombo Stock Exchange are eligible to be included in the S&P SL 20 index only if they meet the criteria of financial viability. So, if you take all the 200 and almost like 90 companies, all those companies, okay, we select the top 20 companies first, okay, and see how their share prices are moving. Select the top 20 company, we have to have a criteria, right? So one is we see the financial viability. Viability can are they stable? What are the other two things we see? What are the other two things we can see? Yeah, we can see their liquidity. Okay, liquidity. And also sometimes you can see their market capitalization also. Okay, so that means how much of market share they have out of the total value of shares in the stock market. How much shares they own? Okay, kita market capitalization kiyanne. Okay, fine. So here next one, question number B. So financial viability, liquidity, market capitalization. Is there anything? You can also take the size of the company, whether it's a large scale or a small scale. S&P SL 20 KNA, if you take 290 companies in the stock market, okay, we have to see the share price of these companies, right? So one thing we do is we see the share price of all these companies. What do you say for that? Fatima, what do you say for that share price index? Where we calculate the prices of all the companies in the stock market. What do you say for that? Others? Okay, ඒකට අපි කියනවා ASPI, all share price index. But if you are seeing only 20 companies, 20 selected companies, ඒකට තමයි අපි කියනවා S&P SL 20. Okay, so where we select only 20 companies out of the total companies we have. Okay, so those 20 companies share movement only we find. So ඒකේ තමයි we say S&P SL 20. If you want to select those 20 companies, there should be a criteria on how to select those. So you have to see their financial stability, liquidity, market capitalization, and size of the company. Then B, in raising funds, blank lease allows lessee to use the property without transferring the ownership. So usually in operational leasing tamai, where person can use the assets, but they can't get the ownership. After the maturity is done, they have to return the assets. But in this lease, the ownership can be transferred. Once the maturity is done, the ownership of the assets can be transferred to the lessee itself, the customer itself. So for this, we can say two names. We can say capital leasing, or you can also say finance leasing. Fine. Then 34 done. 37. So true or false? Please don't just put tick and all, or don't just write T and F. Make sure you write the full term up. Fine. So break-even point. Fixed cost divided by contribution is that is correct. True. Contribution. Selling price per unit divided by variable cost wrong. It should be minus. It should be minus variable cost. Quick ratio. Total assets wrong. Quick assets, okay, we take the word quick assets only. Quick ratio. Okay, so that is also false. Then interest coverage ratio, profit before interest and tax and divide by interest. Yes, that is correct. True. So true, false, false, true. Okay. Then question 38B. The payment for extra working hours over the normal working hours. So a person had to work only 8 hours for a day. If they're working more than 8 hours, the payment we make is something called overtime payment. And also the payment for production over the targets. So some employees would have studied under labor costing. There are two types of payment method. Some employees you pay based on the hours they work. Okay, we say rate kila. For some employees, you pay based on the number of units they produce. So for the people who are working based on hours, if they work more than the required hours, we pay overtime. But think the people who are working based on number of units they produce. So for them, how to pay an extra amount? So if they produce more than what is required, more than the target, for them we say incentives. But anyways, we can take other finance also, ne? Because it's like payment method day. So yeah, it should be 16th, right? But anyways, we'll cover in this. Okay. Hari. Then 38, Hari. Then question number 45 and 46. State for direct financial sources available for a business. Direct means you and the company, no one in the between. So you can take for direct equity, you can take example, even shares can be taken. Okay, you can also take debentures as direct. You can take retained profits or retained earnings. Okay, then shares, debentures, retained profits. Then what's other thing? Sale of assets. Yes, sale of company assets. Then you can take accumulated depreciation. So those are direct way of getting money. Yeah, then name four types of securities that is transacted in the Colombo Stock Exchange. So don't just write shares. Okay, make sure you write the types of shares so you can increase the number of points. So you can take ordinary shares is one security we trade. Then we have preference shares. Then you can take debentures and you can take commercial papers. You can take commercial papers. Okay, then commercial papers. Then you can take what other thing? Ordinary share, preference, debentures, commercial papers, or share warrant. Share warrant. Better give priority for these answers. Okay, but sometimes you can also write even treasury bills and treasury bonds. But I would better say don't write these ones first because guys, most treasury bills and treasury bond is not moved through the Columbus Stock Exchange. Treasury bills and treasury bonds are moved through primary market and secondary market with the help of a primary dealer. So here we see a bond market, not share market. So there is a small violation. So don't, even though scheme is giving answer for this, I would better suggest don't write treasury bill and treasury bond in first. Make sure you give a priority for all these stuff first. Okay, fine. Then 45, 46 done. Part 2. Part 2 question 7, 4 and 5. Fourth one, Balamu. During the past few years, there was a gradual decline of operational income. Operational income of an organization kiani, the day-to-day income, the main source of income a company earns. For example, what's the operational income of a company, of an organization? Yeah, see your answer. What's the operational income of an organization? You know what is operating activity? Ne? The main activity the business does, okay, to sell the product and earn. Yeah, the operational income of a business is sales. Sales is the main operating activity you do. Okay, so they're asking you all the sales has decreased in this organization. So they're asking you all to mention, no need to explain, four strategies way that the organization can use to increase the operational income. Simple. Make it easy. Sales have dropped. They're asking you how you can increase the sales. Okay, even though it's a financial management question, you have to write answers by connecting to marketing chapter. Why? Increasing the sales falls under marketing, right? So what you can do to increase the sales of a business? What you can do to increase the sales of a business? Yeah, simply you can do promotions or you can increase the quality of the product. Okay, and also you can add new features for the product. Okay, so I'll show you the answer 7-4. Yeah, 7-4 here. Product differentiation. Try to sell different types of product. Don't sell only one. Product development. That's what. Add new features, new advertising. Okay, increasing the PR. Do some CSR activities to get the name from the people. Direct marketing. Don't use any intermediaries. You itself directly sell to the customers. Okay. Control the cost a bit. And also use of waste management. Okay. So ability to control the cost. Yeah, maybe you can have some cost controlling technique. Because if you have a proper quality control also, same thing, when you're producing a high quality product, your product won't be rejected. So in that way, you can control the cost of the firm. Okay. So these are some ways where we can increase the sales of the business. Easy question. They have asked in an indirect way. Okay. Yeah, Fatima, that is also correct. You can lower the selling price. So when you lower the selling price, the demand for your product can increase. Okay, so that is also good. Then name two sources of external funds available. So they're asking all two ways you can get money from the external parties for a public limited company. And mention usually when you're studying financial management, you have to assume that you're talking about the finance of a PLC, not sole proprietor partnership. And mention two advantages and two disadvantages of such sources. So they're asking all to write two sources, how you can get money from externally, and they're asking all the advantages and disadvantages of external source of money. So external source of money means you get money from external parties. For example, shares, bank loans, debentures, leasings. Okay. So they're asking what are the advantages and disadvantages also. So example, share, debenture, bank loan, leasing, commercial paper. Okay. So if you want to write some advantage, they have not given the advantages. Uh, we'll write some advantages. So you all help me. Same is some advantages we get when you get money from external sources. What are the advantages? So one main advantage you can get is, okay, you can get a large amount of capital. From external people, you can get a large amount of capital. They're asking only two. Yes, it does not, no impact on working capital. It won't impact your day-to-day cash because you're taking money from external, not your own money. Okay, and if you see the disadvantages you had to face because of this is maybe, okay, it is a must repayment because you're taking money from external party. So definitely you have to pay the money back. Okay, and maybe it can impact your management. It can manage by management because other external people also can participate now in decision making. Very good. You can also say strict rules and regulations. External people, right? So they can impose some conditions and all those stuff. Okay. So these are the advantage and disadvantage of getting money externally. I think that's all from 2017 paper. Okay, fine. Now, 2018. In 2018, they have asked a lot of questions. Well, question number 23. Here, formula. So following are the methods of calculating some financial ratios. From the above, the number of ratios which have been calculated correctly. So they're asking all the correct ratio here. Balamu one by one. First one, return on investment. Net profits after tax correct. Plus interest correct. Divided by fixed asset wrong. Return on investment you divide by total assets. Fixed assets can only non-current assets. Wrong, right? So you divide by total assets. So first one is wrong. B. Return on equity. Net profit plus tax correct. Plus the dividends on preference share wrong. Dividend shares correct. Okay. So dividends on preference share is correct. But what's wrong here is it's not plus. It should be minus here. Okay. Equity capital also correct. Okay. So that is also wrong. Total assets turnover, sales divided by total assets make a hurry. This is correct. Debtors turnover, sales divided by average debtors. Average it is correct, but it's not sales. It should be credit sales. So debtors turnovers balance on how the debtors are credited through credit sales. So they divide by credit sales, not total sales. So that is wrong. Current ratio, current assets over current liability correct. So answer is 2. There are only 2 correct ratio. Answer number 2. Okay. Right. Then question 24. Column X shows certain types of securities. So column X shows securities in Colombo Stock Exchange, and Colombo Y shows the benefits. Okay, they have given you the benefits here. Colombo, ordinary shares. So ordinary shares, one advantage you can get is yes, you can get the ownership of the company. A3. Then preference shares. Preference shares, you get fixed dividends. So it should be fifth one. Receiving fixed profit percentage. Every year the dividend you get is fixed. So it is 5. Share warrant. Share warrant means you can buy the shares at a low price, okay, and you can sell at a higher price. So it should be capital gain. Yes, you can get a good capital gain. Corporate debentures means you get a fixed interest every year. So it should be the second one, entitlement of fixed interest. Government debt securities, it is more protected. Okay, it is zero risk because it is given by the government. So central bank obviously will pay the money back for you. So have more protection if so 3, 5, 1, 2, 4. Answer number 3. Answer number 3. Okay, fine. Question 24 done. Now, 36B. Let the financial planning and controlling blank budget and blank budget are used. So, what are the two budgets we usually prepare in financial management? So, two budget we prepare in financial management is we say cash budget and we prepare the capital budget. Cash budget and capital budget. Okay, fine. Then 41. 41 and 2. Issuing shares for existing shareholders by charging money is bonus share. No. Bonus share means you give the shares for free. You don't charge anything. So that's completely false. Then issuing shares free of charge is right issue wrong. Issuing shares free of charge is bonus issue. So that is also false. That is also false. Okay, fine. Now we'll want it. That's all from part 1. Now part 2. Part 2, they are starting from question number 6, 5. So I studied this unit, but I didn't get how much to study this unit and keep remembering. Which part is difficult in financial management? Which section is difficult in finance management? Because usually the finance management chapter and HR, it's a bit difficult for student. The reason is it's pretty lengthy. Okay, it's too much and sometimes it's not practical also. You can apply the practical field. Okay, maybe HR is somewhat okay. Okay, HR is somewhat okay because it's a complete notes thing. There is not that much of logic there. But finance, yes, I feel it's a bit hard because you have the stock market and all. But what to do? We had to study that. Yeah, Colombo Stock Exchange is a bit hard. The price indices, the listing methods and all. But that's your syllabus. Fine, no worries. Next week we'll be doing a seminar. Okay, so maybe we can use some short tips and techniques for that. So how about the exam? If they postpone, no, they won't postpone. They will keep on the particular day. And also, I saw y'all also posting status of someone said exams to be postponed or they will take strict actions. Did you see that news? So I was just seeing your status. Many of you have posted. Okay. Yeah. Okay. A Bhagat, the one who said was a complete idiot. Okay, one of the most idiotic politician in Sri Lanka. So he Bhagat wrote a book also where he said about uh, East attack. So East attack, we know who are the main culprit. Okay, he blamed another person. I can't say that who is that person. So I don't know. Okay, because your students, they or whoever supports you will be with them. Now I'm not saying you're wrong, but the Bhagat who said was a complete idiotic politician. Okay, which we hate a lot. So why there? It's like politics case. Okay. So usually if you take opposition parties, all the parties except the government, okay, government party, the ruling party, they will say to what postpone the exams tamai. Why? If they say like that only they can get your support. Okay. Because your voters ne, so they can get your support. More than that, you know what they will do. Okay, so when they get your support also, your support, your teachers support and all. So when there's a huge crowd, okay, supporting them, the government had to take the decision. That means they had to postpone because oppositions are opposing, and even the teachers, the universities, everyone are opposing means they have to take that action. After that, what they will do is the person who said now to postpone the exam, that bug itself will say, Balanako, Anduvate Ava, okay, within 1 year, Balana, they can't do the exams on a proper time killer, they will blame the government. That's how politics works. So why they are just asking to postpone the exam is not for your goodness. Okay, so that they can put a blame on the upcoming government and say that Balana, you came to the power in within 1 year and you couldn't do the exams on proper time. Okay, so you couldn't fulfill the promise killer, they can put the blame. So if they put like that, they can catch your parents' attraction. Balana, yeah, that's true. They are not doing the exams on time, killer. Education is going down, killer. Your parents will manipulate. That's how politics works. Okay, so the bugger who was saying about that is he's a complete, he's very cunning fellow. Okay, Gammam pillar. Go and ask your parents, they would say. Yeah, that's what they don't get any benefit. Don't think they have kids. They are thinking about you all feel nothing. Those buggers were ruling our country for almost like 15 to 20 years. They didn't do anything new for the education sector. So why they are doing this? So that they can have a point to blame on the government. Because now if we take away education sector is very strong. Okay, so compared to the previous year, now the education sector is blooming. Okay, maybe you can't understand those, but universities, everything they are, and also you can see a huge syllabus change also. So that there's a radical transformation in the education sector. So when they do like that, when there's a good outcome from those systems and all, the government can easily get the what students crowd because universities, AL students can it's lots of votes, so they can get the youth count. So when these buggers are targeting how they can put this education sector down, so they got a good point. You are supporting. Postpone, kill. Oh no, there's nothing wrong. What's the difficulty you all face? Okay, because your AL started on, if I'm not wrong, 2020. When your AL started 2024, 24, ne? Yeah, 2025. If I'm not wrong, May only you started your exam. Sorry, you have started your syllabus. When did you have your exams? OL exam 2024, wait. Yeah, May, my first or second week you completed. Okay. I remember we started the class by May end. May last week we started the classes. So 24 May kiya ne. Now it's 2026. You're gonna do the exams on August. You have almost 2 years. June, July, August. Okay, we'll just leave 1 month. 2 years and 2 months. Yes. That's a correct timing for ALs. Ne? Then what's wrong? How you all can say you have only less period? You have the correct time. You can't blame anything on the time issues. For an AS, usually you get 2 years time. So you also have got 2 years. We didn't have five. That's the issue. Okay. So you all want what, sir? We need extra 5 months. But ALs is usually 2 years. AL program can usually 2 years. Why you all need extra 5 months? Why you all need extra 5 months? For what? Are January to May part? January to May part? Okay. The reason is usually early and all. ALs, all exams once you're done with all December, okay, once you're done with OLs means ALs will start after 3 months. By March or April only, they'll start the ALs. That's the usual practice, usual law also. But after our exams, due to this COVID economic crisis, government made a rule. Once done with the OLs itself, they have to start ALs. Two reasons. One is they don't have time. You have to make sure that AL exams comes to August. The second issue is many students, when they give so much of idle time between OLs and ALs, they don't have the interest to study. They go for other parts. Kela. The government made a proposal to do ALs quickly after what? OLs itself. Okay. No break. Once you're done with OLs itself, start ALs. So they started implementing that from your batch only. Okay. So that's the reason once you're done with OLs itself, we started the AL class for you. Okay. So yes, you had 2 years. Okay, since you all know previous batches had this postponement, you are also wanting that advantages. We also want this postponement, so they also had day. So if you all ask what will happen, the 2027 batch, every batches will go on that practice. Our exams will keep on postponing the mind. So there should be a barrier, there should be a stop for that. So that stop will start from your bench only. Okay, I know maybe it will be unfair for some, it will be good for some, but guys, if your exams are postponed, mark my words, it will be very difficult for you because when your exams are postponed, you'll start to forget a lot. You may think, no, sir, we have too much time. No, because every brain has a capacity. Just think about the business studies first unit you studied. Background of business you studied before 2 years. Now, if the exam is postponed for another 2 or 3 months, means okay, they want to like example. Suppose I'm saying you're saying for 5 months, okay, we'll say 5 months, recurring or else will be like almost 2.5 years. So you have the same thing which you studied before 2.5 years in your head. Okay, so it starts to fade away automatically. So it will be more better. You have to keep on revising again and again. Studying is not difficult. The difficult thing is to keep the things remembering in your mind what you studied. Recapping is difficult. So when the exams get postponed, there's nothing to study there because already you've studied. The thing is you have to keep on recapping. ඒක තමයි problem එක. So don't pray to get exams postponed. Make sure it will be happening on the same day. Okay, fine. Now, following are some data extracted from a trading account of a firm, right, for information that can be obtained by using the above data. So just by seeing this formal trading account කියන්නේ as well the trading account. So trading account means usually the account which we used to find. You'd have studied in accounting also under profit or loss. Trading account කියන්නේ usually the account we used to find the gross profit. Okay, so through this, what are the informations we can get? We can say our cost of sales is 240,000, and our gross profit means sales minus closing. Sorry, cost of sales. Ne? So cost of sales is sorry, 260. Sorry. Gross profit is 240,000, and you can say even your gross profit ratio. Our GP ratio is 240 over 500, which is almost 48% is our GP ratio. Then you can also say, yes, debtors turnover. Our debtors turnover is sales. Debtors turnover ganna bad because we don't know whether it is credit sales or cash sales. Ne? It's better to go with inventory turnover. Ne? Inventory turnover, cost of sales, it's 240. What is it? 260. And average inventory can opening stock plus closing stock divide by 2. So if you add these two divide by 2, 120 plus 80, 200. So it's 100. So 2.6 times. So these are the informations you can write with this trading account. Okay. Yeah, you have to write the values also. It's better if you write the values. Then sixth question. Which one? Yeah. Uh-huh. Right. I went to seventh directly by skipping sixth. Okay, wait. And in this one, there are some other questions also. No, wait. Question 6. A. Has the handloom textile business run by Dhanasiri is not very successful. He expects to start a hotel. Indicate means no need to explain in depth. 4 ways that he can raise funds for this purpose. So he was running a hotel, okay, which is a sole proprietor business. Now he wants to, and he feels that wait. Sorry, he was running a handloom channel textile business එකක්. But it was not that much successful, so he's planning to start a hotel. For that, they're asking what are the ways he can get money, he can raise money. So simple, he's a sole proprietor. I think he's a single owner. So since he's a single owner, the ways he can borrow or he can get money is, you can say maybe he can use his personal savings, good. Or maybe he can get a bank loan. Or he can get a loan from his friends and families. Or maybe he can sell the assets of the previous business because he's gonna close that business and start new. Or maybe he can start as a partnership, get a new partner. Okay, so these are the ways he can get money for his new business. Then the asset test ratio of Namal's business is 2:1. Give 4 reasons fit to the situation. So usually if you take asset test, we can also say quick asset ratio or we say quick ratio. What's the ideal ratio for quick ratio? What's the best combination it must have? Yeah, the best combination is 1:1. If there is one quick asset, for that one quick asset, we have one current liability. That means if you want to settle a current liability, there should be one quick asset. But in this scenario, you have more quick assets, more than one. So maybe you can simply write what are the things which we record in quick assets, trade receivables. You can write increase in trade receivables. And what other thing we can write? We write the cash. So you can write increase in cash balances, or you can write high cash balances. So simply You can write the components which are included in the what? Quick assets. Or now you can write asset side heading. Assets එක increase වෙන්න ඕනේ. Liabilities එක decrease වෙන්න ඕනේ, right? Okay, so maybe you can write decrease in creditors. Or you can write decrease in bank overdraft. So when the current liability increases, usually in the ratio, what happens? The quick assets keep on increasing, because now you'll have more assets to pay off your liabilities. Why? Your liabilities are reducing now. When your liabilities are reducing, what happens? You will have more assets to settle the liabilities. Okay, fine. Then, mention 4 ways that a business. So this is a question which was repeated almost 4 to 5 times. A business can raise working capital. Working capital කියන්නේ the money which is needed for your day-to-day business activities. Okay, so I'll show you the answer scheme baladna. So because this is a question which has been repeated many times. So here, what are the ways we can raise? Okay, we can increase our working capital. So what did I say? Working capital means the cash which is needed for your day-to-day activities. So if you want to increase your working capital, so usually working capital goes with the formula as current assets minus current liability. Or you can say working capital simply means the cash which is needed for your day-to-day business activities. So they're asking you all in this question how you can increase your working capital. That means how you can increase the cash of your business. The money which you need for your day-to-day, how you can increase that. So simply they're asking you all what are the ways you can get money, or what are the ways you can prevent your money going out. So if you do that, simply your cash, your day-to-day cash activities will increase them. So what we can do, you can get a bank overdraft. Yes, you can get cash, commercial papers. And also remember, all these must be short term. All these must be short term. What are the ways we can get money in the short term? Okay, accrued expenses. If you don't pay expenses, your cash is saved. That is also increase in working capital. Then bank loan, trade creditors, provisions. Provisions means what? You record as an expense, but your money doesn't go out. Your money is saved. So in this question, they're asking us how you can increase the working capital of the business. Working capital increase when known enough, you will get money. Okay, what are the short ways we can get money? Yes, you can also take liquidating investments. So if you have any short-term investment, you're selling the short-term investment. If you sell the short-term investment, you get money, right? Also, you can take giving cash discounts for debtors. If you give cash discounts for debtors, what happens? They'll quickly pay you the money. And also, you can write another one. You are encouraging cash sales. So whenever there's a sales in a business, you're encouraging them to what? Do cash sales. Okay. So make sure sales is done on cash basis. Because if you do cash sales, you get money. But if you do credit sales, you don't get money. You get money late only. But now your company needs money. You want to increase your working capital. Commercial paper means it's a short-term loan which is taken from the general public. Selling non-current assets, right? एक चुटक omit कर because non-current asset is long-term idea. So selling non-current assets is a bit question mark. Okay, so don't write that. Okay, fine. Next question, I'm not reading the question. Okay, so the question was how Colombo Stock Exchange benefits the economy. Okay, so not only our country, every country has an exchange economy. Okay, every country has a what stock exchange. So how it can improve the company or how it can improve the economies. Okay, the image of the company. So wait a minute. First of all, what's the question? I think for the companies, describe. So you have to write small sentences. Why? Because it's just a 2-mark question. And asking on 4 means for one advantage, they're gonna give you only half a mark. So writing a lengthy sentence is waste of time. But you write a small sentence because the question is described. Advantages gained by a listed company from the Colombo Stock Exchange. So from listed company, for a company, what are the advantages they get when their company is registered in the stock market? One is company's name will increase because now they will be called as PLC. They can get a best price for the shares because now what happens is for their shares there will be a value called market value. The price will depend on demand and supplies. And secondary market means now investors who buy the shares of the company can sell those shares in a stock market and investors can get capital gain. So now many investors will invest and buy shares from your company, and you can get some strategic investors, optimum capital structure. That means you can have a proper level of equity, and also it will increase the trustworthiness of the investors. Okay, so those are the advantages for the company. Correct, Ikpa. So that's it, Nate, from that. chapter from that paper? Wait. Yes. Okay. Now 2019. Question number 20. Palamu. From the above, what is the option that contains only, yes, Fatima, through provisions, your cash doesn't go out. Your money is saved. Okay. So following are some of the source of finance. So they're asking us what is the option that contains only direct and internal. So direct means we don't use anyone in between. Internal means we get money within our business itself. So what are the direct and internal? Commercial paper, that's indirect. We get the help of the bank. Bank loan is also indirect. Sale of fixed asset, that is direct. So it should be C here. Wait a minute. I'll make the changes in the ordering. So it should be C, D, E, F, G, H. So sale of fixed asset, yes, that is direct. We can take that. Debenture issue, that is indirect. We can't take. Provision of depreciation, also direct and fine internal. Trade creditors, direct, but it is external. So we can't take trade creditors also. Retained profits, correct. Sale of stock, also correct. So it should be C A G H. C A G H, fifth one is the answer. Okay. Then question number 21. Fixed cost of XYZ company is 60,000. The variable cost of producing a unit of product A is 1 rupee and the selling price of the product is 3 rupee. How many units should be produced to earn a profit of 50,000? So here the question is, we say expected profit. Okay, so expected profit. That means they have given you an expected profit. So we have to find the expected unit. So how many units we had to sell to earn that expected profit? So for that you have a formula, total fixed cost plus expected profit divided by contribution per unit. So in this question, the fixed cost they have given is, if I'm not wrong, it was 60,000. And the expected profit they are earning to earn is 50,000. And the contribution per unit is calculated by selling price minus the variable cost per unit. So selling price is 3, variable cost is 1. So the contribution per unit will be 2. So here your answer would be 110,000 divided by 2, 55,000. So answer number 5. So you have to sell 55,000 units to earn a profit of 50,000. Third one is the answer. Okay. Then question 21, 22, hurry. Then 26. 26 also we can't take. Sorry, that should be HR. Okay, so we can't take 26. That's wrong. Then 26, 39. Fill in the blank. 39, 39. Okay. Long-term financial decisions can be categorized as, I said you earlier, long-term means finance means the way you get money. Okay, so long-term, you have two categories. You have capital structure and then you have dividend-related decisions. And the activities of cash flow statement can be mainly categorized as. So, Baker, it's not in your syllabus, but when you see the business plan chapter, the final part of business plan, you have to draw some statements. In that, this is mentioned. So, cash flow statement, there are 3 activities. You can take investing activities, financing activities, and you can also take operating activities as well. So, these are the 3 activities under cash flow statement. Okay, fine. Then 40, 39 is also done. Now part 2. Question number 7. 7, 1 and 2. Okay. Explain 2 sources of external finance and with 2 limitations of them. This question we discussed. Okay. So in the previous one, they asked all some examples for where you can get money externally and advantage and disadvantage. Same question repeated, but this time they're asking only limitations here and only the disadvantages. So similar question repeated. Huh? Then describe the importance of liquidity ratios for business decision. So liquidity ratio, okay, there are only 2 ratios, which we say current ratio and you have the quick ratio. So they're asking all why we had to have liquidity ratio. Okay, why we have to see the current ratios and quick ratios. So we'll see. The main reason is to identify the short-term solvency. So we'll see how they have structured the answer. So Balanna, so you can understand your Yes, can you all hear? Hello, can you all hear me, guys? Can you? Okay, very sorry. There's a small network issue. Okay. So now we'll see what other ways we can increase the share price of a company. Okay, so you can write general answers. You no need to study because it's not India just guide also. So think how a company share price can increase. So share price increase when they do think always it is good. Maybe because of a bad reason also it can increase. Ne? Okay, so see here demand and supply of shares. Okay, the main reason why share price of a company increases is the demand and supply policy. Okay, so mainly because of demand and supply. My voice is lagging. Is that so? His voice is lagging. Oh, okay, fine. Now okay, I'm connecting hotspot. That's why. And next reason is goodwill. If the company has a good name, එකක් reason එකක් වෙන්න පුළුවන්. Okay, so think about dialogue and all. If you take dialogue, John Keels and all, always their share prices are a bit high because of the good name of the company. Dividend policy. If the company is always paying dividend, definitely investors keep on asking. So share price can increase. Economic factors, I say, if there's an inflation, maybe it can increase. If there's a good stable condition in the economy, also it can increase. Then how about the behaviors of investors? Sometimes some investors they always speculate. Okay. Then political factors of a company and all the stuff. Then next question. Uh, any other questions? Yes, we have. Provide 4 suggestions to control the cash outflows from the organization. Okay, so what are the ways we can control? Make a general question here. Control the cash outflows from the organization. So what are the ways we can prevent our cash going out of the organization? So guys, we did a similar question like this. In the previous one, we studied about working, not only getting money, even preventing your money going out is also what? Okay, is also what? Working capital tama. Okay, so it's also a way of getting money tama. Okay, so working capital increase money not only by getting money, also preventing the money going out. So what are the ways we can control the cash outflows? Arthika, is it maximizing or minimizing? If you want to control the cash outflows, what you have to do? Okay, so see here, delay in payments. I said, what does delay in payments mean? Accruals. If you don't pay the expenses, what happens? The money doesn't go out. Okay, then retaining dividend. Don't pay dividends. Keep on hold. Okay, and you have to control the outflow of interest and dividends. That's what I say. Okay, and also maintaining optimum number. Why? Have the max, not maximum. Don't have many employees, because when you have many employees, you have to pay more salaries. Have a good count of employees. Next one, once you said minimizing the expenses. Through that also we can control the cash need and proper stock controlling. So if when you have proper stock controlling, there won't be wastages. And when you're ordering the stocks based on economic order quantity, you know ordering cost and holding cost will be equal. And your total cost will be at the lower. So you can control the cost there also. Yep. So that's the main thing. I think that's it from that paper. 8-2. Yes. Yep. Next 2020. 2020, question number 25. Question number 25. Okay. In the last year, the current ratio and the quick ratio for company. The current ratio is 3:1 and the quick ratio is 2:1 respectively. Okay. While current ratio remains unchanged in the current year, the quick ratio is 1:1. This indicates comparably. Okay. So in the last year, if you take the last year, if you take your current ratio and if you take your quick ratio, current ratio was 300 is to 100. When you have 100 liabilities, you have 300 assets to settle. And quick ratio is if you have 100. So when you get a ratio question, write some numbers like this and find. You have 200 quick ratios. This is the last year stat. But unfortunately, this year what happens is, in the current year, your current ratio remains unchanged. Unchanged means it's the same. 300 is to 100. But if you take the quick ratio has reduced. Ek reduce vela thenama. Last it was 200. This year it was 100. So you know usually current ratio and quick ratio, if you take current assets and quick assets, has a relationship. So you know in quick assets, we don't record two main assets. Two main assets we don't record in quick asset is, you all know, that is closing stock and prepaid expenses. These two expenses we never record in quick assets. Okay. But in current assets, we record all the assets. So you can understand in the last year, the quick ratio was just 200. But this year it has decreased to 100. 100 reduce vela තියෙනවා. So when quick asset reduces, your current assets also reduce. Why? Because quick asset is just one component of current assets. Or if you take current assets here, current assets includes, you have the quick assets and you have the closing stocks and you have the prepayment. Make it my current assets කියන්නේ. So if quick asset is reducing, what automatically happens? Current assets also will start to decrease. Ne? So if quick assets decrease by 100, the current assets also had to decrease. So what should have happened? This 300, this year, it should have been 200. It should have been 200. But in the question they are saying, no, it's the same 300. But you know it should have decreased by 100. That means the answer should be 200 is 200. But the question okay, they're saying, no, it's 300. So you can understand, other side, okay, 100 is increasing. Because why? Your current assets now should be 300 rupees. Okay, but you know when the quick asset decreases, your current assets also drops. So when it drops, it becomes 200. But in the question, they are saying, no, it should be 300. So if you want to make it 300, you know you have to add another 100. But careful. While you're adding this 100, it should not have any impact to the quick assets. So you know you have to understand, if I increase 100, okay, you have three assets here. So out of these three assets, 100 should increase. Okay, only if that 100 increases, current assets also will increase. But you're confused which asset I have to increase. Do I need to increase the quick assets, the closing stocks, the prepayment? But you know, you can't increase the quick assets because quick assets already decrease. You can't touch that part. Now what you have to increase is either you have to increase the closing stock or either you have to increase the prepayment. When you increase either of these only, current assets will increase. Quick assets, no impact. Because quick assets closing stock and prepayment, there won't be any impact. So you have to increase 100 in current assets in a way that quick assets mokut impact when no. So if there's no impact means either your closing stock should increase or prepayment. So we'll see the options here. So there is one option, yes, increasing closing stock. Second one is the answer. Okay. Following are several types of financial market. From the above, what is the group which belongs to only capital market? Capital market can a long-term financial market. Long-term. Okay, so we'll see example for capital market, corporate bond, yes, capital. Share market, yes, capital. Treasury bond is also capital. So it should be BEF. Third one is the answer. Okay, then question number 25, Harry, 26, 39A. 39A. While a fixed rate of blank is payable for debentures. So for debentures, we pay a fixed rate of interest. And a varied rate of blank is payable for ordinary shareholders. For shareholders, we pay dividends. We pay dividends. Okay. Then, part 2. Question number 6. You have fourth one first. Well, I'm a fourth one. List 4 objectives of financial management make up in discuss kara. That's the first question we discussed in 2016. Then, describe 2 advantages that shareholders can obtain through effective financial management. So when your company is doing the financial functions properly, what are the advantages a shareholder can get? Okay, so one advantage they can get is they can get guaranteed return. For sure, they can get money in return. Profits ganna pulluvan. And also the another important advantage is security of investments. They no need to worry, their investments will be protected. Okay, when it's a proper financial management, and more than that, their wealth can be maximized. Okay, their wealth can be maximized. So these are the advantages as shareholders can get when there's a proper, effective financial management in a business. Okay, then 6-4, after that 7-1. Good question. Ratios. Okay, so using the given information, calculate each of the following ratio. So what's the first ratio? Net profit ratio. So we'll calculate the net profit. So whenever they ask your ratio question, better to write the formula and go ahead with the answer. Okay, so net profit, net profit ratio in accounting we take, sorry, in business studies we take profit before tax, not after tax, divided by sales. So profit before tax, they have given 60,000. Sales, they have given 100,000. If you multiply by 100, you'll get 60%. So net profit is 60%. Then return on equity. Return on equity, we have to take the profit after tax minus the dividends on preference shares. Preference share dividends divided by equity capital multiplied by 100. So, profit after tax, they have not given, but they have given you the profit before tax 60. So with that, if you go and deduct your income tax, you'll get the profit after tax. So with 60, if you deduct 10, it's 50. Minus preference share dividend have they given? Yes, preference dividend is 50. Oh, how much is the equity? Equity means ordinary shares and all those stuff. So you have ordinary shares of 300 multiplied by 100. So 3 zeros gone, zeros gone. So 40, 35. Oh, 35 divided by 3. So what's the answer we're getting? Return on equity. Is it a decimal value? Yes. It's going to be 11.66 percentage. 11.66 percentage. Debt to equity. Debt to equity means you compare your debt capital with your equity capital. So debt to equity. So debt capital means long-term liabilities. So preference share is a debt capital. So you can take 200,000 debt. Equity you already took, which is 300. 300. So 2 divided by 3. So it should be 0.66 percentage. 0.66 ni. 6.6. Okay, fine. You can take in that way also. Or you can write like this also. 0.66 leave word, don't write the percentage. Sorry. Okay, if you write 0.66, don't write percentage. You just write 0.6 is Or if you want to convert into percentage, just multiply by 100. That's it. 66.67 percentage. Okay. Hari. Then so it's high geared. High geared. You have a high equity capital, debt capital, high geared. Then what's the next one we can take? High interest coverage ratio. Interest coverage ratio, the formula is profit before tax plus interest divided by the interest. So profit before tax given in the question is 60,000 and interest expense is 5,000 divided by 5. So it should be 13 times. This is not percentage, make it up, 13 times scalar. So these must be your answers. So that's what I said. If you're good at accounting, if you can do accounting ratios very good, that means you can try these questions a bit. Okay, fine. Then, what is capitalization of reserve? Capitalization of reserve, we can say another word also, we say bonus issue kela. We say another word, bonus issue. That means you convert your reserves into capital. That means the profits you earn, you convert those profits into capital, means you give the profits as bonus for the investors. So what will happen now? The investor shares will increase. So usually for investors, the bonus we give is new shares. To give new shares, we use the reserves, the money in our reserves, the profits. So what happens? The reserves will decrease. Your share capital will increase. Okay, capitalization of reserves. You are converting the reserves into share capital. Okay, so I'll just show you the definition they have given for that. Yeah, capitalization of reserve. No, but that's only a part of the definition, Fatima. You have to write the other thing also, converting the reserves into capital. The reserves of the company are converted into share capital. Okay, so that's very key important definition. So only the existing ordinary shareholders receive these new shares according to a certain ratio. So they don't just give bonus. If they want to give a bonus, they go with a ratio. They say if we have 5 shares, we give 1 share as a bonus. And also when capitalizing the reserves, the declared capital of the company will increase. That means the stated capital of the company will increase. Okay. And the equity impact, if you take, the impact of the equity will be 0. The reason is why? Because your capital is increasing, but your reserves are decreasing. So set off names, so there won't be impact in the capital. Okay, good. Then what's the next one? State for advantages of investing in government securities for an investor. That means if you invest in these treasury bills and treasury bonds, what are the advantages you get? Okay, so you can just write some advantages. You can get a high interest, and also those interests are fixed, very low risk because government is there, and high liquidity. Okay, you can sell that and convert it to money. And sometimes you get tax benefit because you are investing in government. Okay, and also you can get government's guarantee discount. You can sell that securities even before the maturities also. Okay, they mention the importance of share price indices to investors, giving 4 reasons. Share price indices can, whenever you log into share market, okay, so whenever you log into share market, you will see a portal. In that portal, there are some digits, number, indices scalar. So you have indices like all share price index. Then you have a total return index. Then you have S&P SL20 index. So like this, you have many indices. So through these indices, what an investor can get, guys, these indices only says how the stock market is performing today. Is it performing good, or what about the performance of the our country's share market with other countries' share market? And with this indices, we can understand how our economy is performing. Are we in a recession or are we in a growth? And also how the companies are performing. Okay, so you can see here. So they are silent on the number of importance, but since they're asking for 2 marks, you just multiply the 2 marks with 2. So you have to write 4 importance. So I have scheduled if they are silent on the importance, what you do is you multiply by 2. Okay, the marks multiply by 2. So you can see, you can get a knowledge about how our economy is performing and how the companies are functioning. Okay, through S&P SL20, you can see how the companies are performing, and it will help you to make investment. Is this the right time to invest? Are we in a bull market or are we in a bear market? And also you can compare the share market conditions other countries as well. Okay, so these are the 4 advantages you get because of price indices. Okay. Then, what's the other question we have? Question 15. Here. Try two ways of increasing working capital. A repeated question. I said, okay, so the same question has been repeated many times. And state two reasons for delisting a listed company. Delisting can you are registered in the stock market. Now they are removing you. Okay, they are not giving you the approval. They are just removing from the stock market. What would be the reason? Maybe we'll say your company goes bankrupt. Okay, you are doing an illegal business or your company is completely closed. Or maybe your company has been acquired or merged. When someone else is buying your company, you have to close the company so it will be delisted. Or maybe you're not submitting the financial reports on time, financial statements on time. And also you can also say non-payment of registration fee. So you have to understand you always pay the registration fees regularly. If you don't pay also, it will be delisted. They will be under watch list board. I mean, okay, but not all these situations. When you go bank, when you are acquired or merged, it won't be under watch list. It won't be there on the stock market even. But if you are bankrupted, not submission of financial reports, non-payment of registration fees means you will be under watch list board. Okay, you will be under watch list board. Fine. So these are the situations where your company can be delisted. Yeah, unethical trading practice is also correct. If you do something illegal also, that is also will make you to be delisted in the stock market. Recently, NDB, they face a situation like that. Okay, they were delisted, but once again, they were listed again. Okay, because it's a bank name, billions of monies are revolving. Then, 2021. Question number 24. Uh, we have done that. Okay. Then question number 26. The liquidity ratio of a business was 3:1 and 1:1 in 2020. Okay, 19 it was 3:1. For one liability, you had three assets to settle. In 2020, for one liability, you have only one asset to settle. This indicates liquidity has improved. No, wrong. Because earlier you had three assets, but now you have only one asset. So the liquidity has dropped. Short-term loans could be easily settled. No, now you will face a difficulty when paying the loans. Okay, because now you have only few assets. So both the statements are incorrect. Third one is the answer. Okay, then question 30. Fixed cost of a manufacturing company is 200. Variable cost per unit is 5 rupees. And the average cost of producing 1000 units. So average cost means variable cost per unit plus fixed cost per unit. So for average cost, you can say another word also. Total cost per unit. For one unit, what's the cost? My average cost here. So variable cost they have given as 5 rupees. Fixed cost per unit, total is 2000 and the number of units you are producing is 100. So it should be 2. Then 7 rupees is the average cost. 3 is the answer. Okay, third one is the answer. Then 30 done. 33B. While ordinary shares belongs to, that is equity capital and preference share belongs to debt capital. There's a small thing you have to understand, but if you can note it down if you want it. Usually in financial statements, when we record preference shares under which capital? When we record equity capital or debt capital? When we record, where do we good, Fatima? Others? When we record, you all know we will record under equity capital only. But when calculating for formulas or for ratios or for anything, or when calculating the total also, you have to consider it as debt. So please understand. So for this reason only we say preference share has the feature of hybrid securities. Hybrid securities. Okay. 33B is also done. Then 40th question. Payment for suppliers of a cash flow statement is considered as an payment for suppliers. So it's a cash flow. In cash flow, we have three activities. Supplier payments falls under operating activities. Day-to-day business activity. And purchasing of fixed asset is considered as investing. It's obviously investing because you can't take financing. The word is and. So the answer should start with a vowel letter. Then the CDS is a wholly owned subsidiary of the Colombo Stock Exchange, which functions as a market intermediary. So through CDS only, we can buy and sell securities, okay, shares simply. Through that only money is involved, and also it is called as the clearing house. So since money is involved, we say it as the clearing house as well. Okay. Then part 2, question 7, 4, and 5. Palamo. State 4 benefits that the firm can obtain by preparing a financial budget. So financial budget, since if they are silent, you can assume that it can be both. It can be either cash budget or capital budget. Okay. First answer. First answer again. Which one, dear? This one. Last. Right now. Right. Okay. So they're asking the importance of preparing a financial budget. So we'll go with the scheme itself. So the main two advantages, you can identify the cash which is needed to invest in the future and the cash which is needed to source this deficit. Okay. So here. So if there's a cash surplus, so in future, if you feel that you're gonna get a excess cash, surplus means you can identify what are the investments we can make now itself. First one. Second one, if you feel that in the future there can be a deficit, what are the things we can make to overcome that? So what are the ways we can get the money now itself to overcome the deficit? And also it will easy to be but control and plan. And also you can obtain business loans and secure. Simply you can have a proper financial status in your business when you prepare a budget. Okay, then write for examples for capital investment decisions. So capital investment decisions can long term decisions. So long term investment decisions. Investment means your money goes out. Capital means long term. So example, you can write business establishments. It's a long term purpose. Then you can take business modernization. Okay, then you can take business modernization expansion. Modernization means you're adding some features, okay? And expansion means you're opening a new branch. Or you can take long-term investments. So these are some examples. Diversification, that is also a good one. Diversification. So these are some examples for capital investment decisions, long-term decisions. Okay. Then state what is operating ratios and write two advantages of it. Operating ratios means simply we say activity ratios. Activity ratios. Okay, where you calculate the inventory turnover, stocks turnover, those ones. So what is operating ratio? Operating ratio shows whenever they ask you a definition of ratios, you write the word relationship. But it shows the relationship between your investments in assets and the returns you're earning from that. ඒක තමයි operating ratio කියන්නේ. How effectively you're using the assets to earn a return from that. So right to advantages of that, yes, the advantages you can see is you can see how effectively you are investing your assets. More than that, you can be smart. You can try the advantages of each ratio. For example, one ratio will take inventory turnover. So through that, what's the advantage we can gain now? You can understand how many times, okay, we have sold our assets or sold our inventory, sorry, sold our stocks. And through debt turnover, you can understand how efficient is our debt collection. How efficient is our debt collection. So simply you can take the ratios of that and write the advantages of those. Okay, so I can show you the answer. So see how they have developed the answer. Wait, yep. That shows the relationship between investments in assets and the earnings from them. And the advantages is here. What's the benefit of investment? Okay, and to know about your debtors turnover and stocks turnover. So simply you can write the sub ratios and its advantages. Okay, fine. Then 7.1. 7-1 Balamo, 7-1. What's the question? Is that all? That's it, ne? Or do we have anything? Which one, dear? Mm, no, I think we have missed something. Did I mess up the old interbank call money market? Ah, okay. Okay. So state what is yeah, man. Explain what is meant by interbank call money market. Interbank call money market කියන්නේ where the commercial banks, okay, a commercial bank which has an excess money provides a loan to a bank which has a deficit. So among banks there is a flow of money, flow of money, and it is happening in short term. Why we say interbank? Because it is among the banks. While call money is, it is happening over the phone. Okay, within minutes, the money will be transferred among the banks. So, for example, HNB transfers 10 million to Sampath. Okay, and Sampath had to repay the money very quickly. Maybe within that day or the next day, they'll repay the money. So simply the money has been transferred among two banks. एक तमा interbank call money. So you can see the definition here. It's an overnight. That's what I say. Overnight means within one day it should happen. Okay, mainly assist in commercial bank in meeting their liquidity requirements. What is the requirement? Which will help you the banks to lend money and the other bank to borrow money. Okay. Then 2022. Question number 24. From the financial management decisions, what is the long-term financial decisions? I said your financial kiyanne the way you get money, or maybe we can say you don't let your money go out. ඒක තමයි finance decisions kiyanne. So what would be the answer? What would be your financial decisions here? Modernization is investing. Diversification is also investing. Stocks is also investing. Bank overdraft is not investing. Ne? Through bank overdraft, we get money. Ne? Dividends also, money goes out. So it should be the fifth one. Then, out of the above, select the option which includes instrument pertaining only to money market. So, if I'm not wrong, previously they asked you capital market. Now they're asking you all the money market. So, money market is short term market. Short term market. So, short term interbank call money is short term. Commercial paper short term. Treasury bills is short term. Letter of credit is also short. So B, C, E, G. Third one is the answer. Okay. 24 schemes is third one. Third one. I made a mistake. Can anyone say me what's the mistake I made? I said bank overdraft is a way to get money tamai. But I made a mistake there. I did perfect Fatima. I didn't read this word. Long term, because bank overdraft is short term. You get money, but you get money if it is settled within 1 year. So it's short term. So obviously we can't take bank overdraft. But under long term financing, you have only two types of decision. You have either you can go with capital decisions or dividend structure. Capital like you have equity and debt, dividend like you have dividend policies and all those stuff. So yes, then third one would be the answer. Dividend. Sorry, yeah. Thank you for identifying that. Then question this year is this 2022? Yes. 36A. Financial market consists of. So there are many types of financial market category, but we go with the main two based on the maturity. So you say money market and capital market. It is money market and capital market. Hari? Then the abbreviation of global interbank transaction payment. Globally, banks are making payment among them. ඒකට අපි කියනවා SWIFT කියලා. You write only the abbreviation of the full term because they're asking you the abbreviation is so SWIFT stands for Society for Worldwide Interbank Financial Telecommunication. No, dear, because ICMA usually there are many categories. You have primary market, secondary common market, you have over the counter market. There are many categories, but in your syllabus, you study money and capital mostly. Okay. Then the abbreviation for interbank online transaction system, interbank. Okay, the bank within Sri Lanka. We say SLIPS. Okay. So SLIP stands for Sri Lanka Interbank Payment System. Sri Lanka Interbank Payment System. Okay. Right. Okay. Short-term solvency of a business can be identified through liquidity ratio. So through liquidity only we can identify whether we have the money to pay the short-term liabilities. Whereas blank ratios identify the relationship between investments in assets and its return. So investment in assets in returns, etc. You studied just now, it's operating. Okay, or you can take activity. Both are correct. I think in your scheme they have given investment ratio. Investment ratio kila mokut na. It should be activity operating. Then blank budget is used for estimating cash requirements. Cash requirement means it is cash budget. And blank budget is used for planning the long-term potential. So that is capital budget. Capital only we think how much of money we need in the long run to invest. Okay, so cash budget and capital budget. Then part 2. Question number 6, 4 and 5. Indicate two advantages. No need to explain. By purchasing treasury bills. Okay, so same is some advantages of purchasing treasury bills.